What's up, everybody? Welcome back to another video. Today we're talking about when bad economic data stops being bullish. And right now, everybody is celebrating weaker jobs because they want rate cuts. But there's a point where weaker data actually stops being bullish. And for that, we're looking at a Sahm Rule. It tracks how quickly unemployment is rising compared with its recent low. When it moves above 0.5, that has historically been associated with the start of a recession. Now, we're looking at a current reading of negative 0.03, and to be honest, right now we're still well below that level. So softer jobs can still strengthen the case for Fed cuts. Now, if unemployment starts rising too fast, the story changes. The market stops thinking, great, rate cuts, and they start thinking, wait, recession. So, looking at the Bitcoin chart, we do have a very thin line that crypto traders need to watch. Crypto likes the softer data. It does not necessarily like an economy falling apart or everything going to hell, basically. There's a very thin line between Fed got bullish and oh my gosh, recession is super bearish. So, stay tuned for more videos like that. And if you want to know the full insights, check the description. I have a link to my private group. See you there.